Our next guest is, I'm very excited to be able to introduce him today. He is actually a partner of Rubicon Venture Capital and is currently, currently launching 7cryptos.vc, which is a crypto fund. Andrew Romans is his name. He's a successful VC and has brought many projects to fruition and has raised several rounds of capital for multiple projects over time. He works predominantly in the tech space, and the Global TeleExchange network was one that he raised $50 million for, and has an MBA from Georgetown University. Please welcome Andrew Romans.
Good afternoon. I don't know tell me when these slides come back. Yeah, so do we have any VCs in the room right now? Wow, that's amazing. You think there'd be more? How about people with crypto funds where you're investing somebody else's money? Okay. Well, I'm going to talk a little bit about how VCs are responding to, I don't know if this clicker is responding. Is there a way for me to advance the slide? I hit the green button? All right, well, we can go with no slides, but if someone can help me advance the slide, or if this thing's not on, that would be cool. All right, so listen, I'll go without slides if no one else can figure that out. I guess one thing to understand is that there's kind of like VCs right now fall into one of two different categories. They're either VCs that are excited about blockchain and crypto and the liquidity and the energy and everything, and those that are still very, very skeptical. And I would argue that a lot of them are still very, very skeptical. So on this slide, you can see I've written a couple books. If you just type in my name in Amazon, usually 2 come up in the top 10. It came out in Chinese, the first one, and China Renmin University Press is publishing my second book, which is called Masters of Corporate Venture Capital. So we've raised money from Lenovo, from Legend Holding, from large corporations. And to me, to create a partnership between a startup and a big corporation is a good opportunity. To go directly to the large corporation, Huawei has 3 CEOs. It might be a disaster. And for an American company, you're maybe better off not trying. But the new book I've just finished is called Masters of Blockchain and ICOs, where I interview Consensus and a whole bunch of kind of thought leaders, around the beginnings of Bitcoin and how it gets into smart contracts and where that's going. And so I'm extremely excited about that. But first, I'm one of those people who believes that every Fortune 1000 company on the NASDAQ, on the New York Stock Exchange, the Nikkei, the LSE, they've got these static securities that cannot do anything. Even if they're digital, it doesn't do anything. I believe they will all be delisted, and they will all issue security tokens that have code in them so that you can walk into Walmart and buy something with 10% off and trade your shares for currency there. I believe that every airline, you'll be able to trade those frequent flyer miles, and they'll have code that a human makes that self-executes. So like mortgage-backed securities should be done on tokens. So I think not just all financial services will be tokenized. I think that the house you live in, why have a 10% down payment or 20% down payment on your mortgage? Why not spread that across mostly London, San Francisco, and New York if you think they're going up faster than wherever you live in Florida? So I think that the tokenization wave that's securitized is massive. And I think that regulators, you have innovators that move faster than regulators, so there's a delay. And so it's hard to put a square peg into the circular hole. And they need to write new legislation for this industry, but you can operate within the existing laws and do this legally. So part of my objective, even with the book, is to start convincing other VCs, family offices, endowments, pension funds to adopt this, and to also convince large corporations to see how they can be potentially disrupted and really damaged, as well as opportunities for their back office and front office for that. And all this requires a lot of old school venture capital investing. So let me just say it's a huge opportunity. I don't think I need to preach to the choir here, any further on what it means. So why are they so negative towards it? Well, if you look at our portfolio companies, some of them, they go through pre-seed, probably with somebody else. Then they raise seed money, probably with somebody else, meaning not Rubicon Venture Capital. By the way, they misspelled the name. It's Rubicon is R-B-I-C-O-N, but that's OK. Then they go through maybe demo day, often standing here for Y Combinator on this stage. And then there's late stage seed, and then Series A, B, C, D, and on your way to becoming Uber. It's a little bizarre for the VC, who's actively investing out of a normal fund, to see a company that's looking to raise like $40 million, or even $100 or $300 million, and it's pre-revenue, and they're not paying anyone on the team salaries. And more often than not, the CEO is 18 years old from Minsk, Belarus, and he's never been on this stage pitching at a YC demo day. So it's a bit like, what? That's a little overvalued. And then the VC doesn't understand he's offering to sell tokens but not equity, and the VC wants the equity. In my opinion, if you are gonna invest in that company, that token will inevitably go to zero, and if you're stuck with the equity, you are completely screwed. If you want to get into that horrible Belarus deal, you're better off with the tokens and flip out of it than be stuck with the equity that'll maybe never get anywhere. So there's a lot of misunderstanding with the big pools of money, the big family offices, the endowments, the pension funds, even Sand Hill Road and VCs. And probably the average consumer in Seoul, Korea, or Tokyo seems to understand it more than the VCs, which is kind of ironic or amusing. So yeah, I kind of talked about a bit about how they're freaked out, but I think that, and they're making too much of a connection to crowdfunding 1.0. And yes, if you look at 1,000 deals, there may only be 10 worth funding. So you kind of have to go through more ICO projects than what you're used to in the old VC world. In the old VC world, we pretty much only look at deal flow that's being introduced to us from people that we already know. So we're just not used to seeing such a high volume or percentage of the deals being what we would typically think are unfundable. And a lot of people funding them are not even looking for companies that'll become high growth profitable. They're looking for tokens they can buy that they think they could flip and get out of within a month or 4 months type time frame. So it's a very different mindset. So I think, or another point is, so how should VCs be treated in the ICO world? When I first heard that big VCs were providing in the term sheet that you cannot do an ICO without our permission. So that's like a new standard term sheet that we as VCs can block your ICO. I thought, oh my God, these guys just do not know how to seduce the entrepreneur. They just make themselves so painful. But I've experienced it that one of our companies, we had invested about a total of $10 million into the company. It's doing well. It's going up in value, and we're not liquid. We're going in a long wait to get exit, M&A or IPO. And then the company raised $30 million in tokens and issued a lot of that to themselves that they got liquid on, and they're like buying houses. And I'm wondering, is my equity worth anything now? Because the guy doesn't even want to sell the company. He already basically IPO'd and survived the lockup. So it's a bit, it makes you think I would have been better off with the tokens. And why did he not issue tokens to me when I was his seed investor? I was in the first round before Mark Cuban got in, before Ashton Kutcher got into that deal. So we almost could say the guy's name. Should have given me tokens as being part of the ownership cap table, but he issued them to the management. We made the token sale with a big discount, was what he was offering, available to our LPs, and didn't even run it through us for fear of the SEC seeing Rubicon messing around in potentially is this taxable, and what the IRS wants to tax it, and the SEC says it's a security, and CFTC says it's a commodity. So it's like, how can these three people are disagreeing with each other. What am I supposed to do? Stay clear of it. So what we've decided to do is create a new fund. We're calling it 7crypto.vc. And our basic strategy is we're thinking the deal flow on itself is not quite there yet for us. And we have relationships with so many large corporations. We advise them on their corporate venture capital programs, and we advise them on all kinds of things, as well as governments, in fact, on their fund-to-funds matching and tax programs, that we should work with large corporations on a management consulting base that if they pay us, we'll show them how they're going to get disrupted if they don't act, and we'll show them opportunities on their front office and back office to apply blockchain technology or distributed ledger technology, as well as just tokenization strategies. And we're recruiting wizards. You would never see a general partner from Kleiner Perkins as a venture partner at Sequoia, but we actually have other crypto VCs as venture partners of our fund. It's a bit different. In the old world of VC, these guys, their funds are big. They want to have a minimum target ownership percentage. Like Sequoia wants to own 20% when they invest. If they see Rubicon say, we want 20%, the founder is saying, I'm not selling more than 20, so you two work it out. And then we might say, all right, we'll do half. We'll do 10 and Sequoia gets 10. And then Excel comes in and tries to get half. And the CEO might push us out. So now it's Sequoia, Excel doing 10 and 10 percentage ownership. And that the deal closes, we might get 500K in a 20 million round. In the new world of crypto, we're thinking, I want to oversubscribe this thing so that it's like 5x oversubscribed by the time it gets onto exchanges. A lot of people that invest in ICOs don't want to invest in trading it on the exchange. We want to make sure that the price of the token goes up and we can divest something. But we believe we're bringing a long-term kind of old school venture capital company builder mentality that's there for the long term. But I have to admit, if I could go to a YC demo day and listen to 200 pitches and invest $1 million into my favorite 10, and then a week later divest 1.5 million from, or 2 million from 80% of them and leave tokens there to go up, that's pretty exciting. Imagine if you invested $1 million in my VC fund, and 4 years later, I've paid you the $1 million back, and then 5 years later, I've paid you like 6x back and we're doing well. Now imagine you invested $1 million into my fund, and less than a year later, I've paid you more than $1 million back. I can already go back to you and say we're launching the second fund, or we're getting more specialized in this and specialized in that. So I think that the opportunity for LP investors, people investing in funds, the added layer of liquidity to be able to skip this wrinkle of time of 5 or 7 or 9 years and get straight into an IPO without a lockup is mind-boggling on what it means to the industry. At the same time, we're living in a world of pump and dump, lack of due diligence, where they only diligence enough to say, is it a scam? And I know it's going to go to zero. That's inevitable. I want to get out before it does. That's where I think we largely are, in the marketplace. Of course, there's exceptions, but that's the, consensus is, 1 out of 1 million. It's at least 1 out of 100 for me that are a good project. So we're structuring 7crypto.vc with a VC fund that can offer to put, to buy equity. We expect to be granted tokens if we put in equity. And now you can start paying people. You can buy a plane ticket. You can, develop that business. I think the bar is getting higher for a successful ICO compared to November, December 2017. So we're ready to buy equity. We've got another fund for tax reasons that can buy into the ICO. So we can write a big enough check to get the discounts they're offering. Before wiring money, we can call the other 150, literally, funds that we like and get them to invest with us. And then when it gets onto an exchange, we've got a liquid crypto fund that is, buying and selling in and out of Ether and Ripple and Bitcoin. But it's also able to see this is going to pop on the exchange. And we have a lot of information before it got to the exchange that not every other algorithmic crypto investor has. But we're also recruiting city managers in different cities. So in Macau and Hong Kong, we're looking to recruit a city manager that once a quarter and eventually once a month will host an event. And unlike the other events where you pay money to pitch, so the pitches you hear are not the good ones. They're the ones who paid money to be there. That, to me, is an insult to my time as an investor to have negative adverse selection on the deal flow. We're going to get only what we think are the very best startups, and we'll say, here are 30 cities across the world, from Seoul to Tokyo to Dallas, Houston, Chicago, and you roadshow until you're done, if you want to. We also have venture partners that are wizards of influence marketing across countries that can do it that way. So we'll be positioned to oversubscribe these ICOs that we choose to get involved with, create partnerships with big corporations, and we're building out this advisory group of venture partners that can get involved in any aspect of the business. I'm also looking, again, if anyone has a publisher contact for my Masters of Blockchain ICO book in Hong Kong, Macau, or Singapore, that might be better than China Renmin University Press. We might have to censor half the book, for that one. And so that's really it. Rubicon Venture Capital is doing pretty well with 105% IRR. I think Cambridge Associates puts us in the top 4% of all VC. So, and we co-invest. We've traditionally co-invest with top VC funds, but 7 Crypto is going to be very different, and I'm extremely excited. I think every entrepreneur I meet in blockchain is like the most interesting person I've ever met. And so the whole level of energy is exciting. Once you start really thinking about crypto and tokenization and all the things blockchain means, it's hard to think about anything else. And I'm at andrew@rubicon.vc. I'm on WeChat too, but let's stick with andrew@rubicon.vc for right now. Thank you. Probably no time? Okay. Thanks, man.